Welcome back to Asma Roundtable discussion. We are here talking about taxes. Mr. Do you have anything else to add to what Mr. Boatin said about the due dates?
Yes. Normally the due days, as he said, is on April 15. But because of the holiday in DC that falls on April 15, IRS extended that to April 18. The due date is important. Though we don't do it much these days, those that do paper returns, if you want to mail your returns to the IRS instead of electronic return, it has to be postmarked by the post office by 12 midnight of April 18. If not, your tax returns are late. Years ago, people used to form a long line at the post office and there will be somebody standing down there collecting your bills. Yes. But what is important is the stamp on the mail by the post office. If you are doing the paper returns, make sure you get your tax returns to the post office before 12 midnight
April
of that
18.
April 18 or the normal April 15 when it's not DC holiday.
Okay, so April 18th, do not forget to mail your taxes. What I also want to know is that what happens if you don't file your taxes? What is going to happen? If you decide, this year I've worked, but I don't think I made enough, so I don't want to file my taxes. So what happens?
Unfortunately, this is something that we don't have any choice on. Okay, you cannot refuse to file your taxes this year and then add this year's income to next year's. You cannot do that. Every year is separate and independent from the other one. If you are not ready to file your taxes by April 15, file an extension.
Okay.
The extension will give you automatic 6 months to do your taxes. File what we call Form 4868. File it to the IRS. And you also have to file that form by the due date of the tax returns, which is April 18 this year. After April 18, it means you did not file it, you cannot file an extension. So the worst thing you can do is not file your taxes at all.
Okay.
If you're not ready, file an extension. If you don't file your taxes and IRS finds out, there are penalties for not filing your taxes. If you owe, in addition to the amount you owe, the interest on that, they're also going to assess your penalty for not filing your taxes. So the worst thing you can do is not to file your taxes at all. Doesn't matter if you owe money or not, just file an extension. However, remember that an extension to file taxes is not an extension to pay.
Okay.
If you think you owe taxes for that year, make a payment and then file the extension and then file your taxes later on. Extension to file is not an extension to pay.
Okay.
Then the question is, I've not filed my taxes, how will I know how much to pay?
Yes.
Make an estimated effort to pay something. Estimate what you think your tax is going to be, and then you pay it at the time that you file your taxes to avoid the penalties.
Okay. So extension to file is not the extension to pay your
taxes.
what you owe.
That's right.
These are two different things.
That's right.
So if you owe, you must pay.
Okay.
But if you have an extension to extend your taxes because you did not file it, you get that extension. And your
Automatic.
accountant will help you do that, right?
That's right.
So let me add to what Mr. Du said. So the extension is 6 months. The automatic extension is 6 months from the time that the tax is like from 18th of April, 6 months time is where the extension, that's the extension period.
The grace period.
The grace period for you to file extension.
Okay.
And one of the things that you have to know is that, as Mr. Du said, you don't know whether you own or not. So for businesses, we always advise them that try to pay estimated taxes, what we call estimated taxes, so that you lessen your burden when it comes to the time that you have to file your taxes. And then one of the things, as Mr. Du said, it's better to file not to file at all. Now, there's also another grace period for IRS, which is 3-year period. If you don't file your tax for within 3-year period, then they will come after you.
Okay.
Then you have breached the law.
Okay.
Now, the same reason also works for us. If you file your tax and there is an error on the taxes, you can go back 3 years to amend it. So you have to know that amendments is within 3 years. So if, for instance, you file your taxes and you forgot to put your dependents on that taxes for last year, you can go back and amend it. But if you did that in 4 or 5 years ago, you cannot do that. There's another point. If you file your taxes in, let's say, 2010, and IRS just found out that there was a fraudulent scheme, there's no time limit. They can go back whatever years. There's no limit on that if they found out to be fraudulent.
Okay.
So you have to, the people have to know about that. Because if it's fraudulent, there's no time limit. They can go back 20 years and then they will come after you.
So this is why people get audited?
Yes.
Their taxes, or
Yes.
they go back to review their taxes from years before?
Yes.
To figure out if there was any fishy or fraudulent information
Information on the yes.
Okay.
That's what IRS does. And that one, we don't have any control over that. IRS will do, because something may trigger that audit.
Okay.
So you don't know. So that's why we say you have to go to your tax professional and then get the professional advice so that you can do things in the right way. Don't take it. Yes, you can still file your taxes. I think we'll get there.
That's fine.
Yes, but the point is that you have to always consult a professional because of the complexity of some of the taxes that you file. Some people do investment, they have other sources of income. So they have to just go to a professional to help them to file their taxes.
Now, Mr. Is it advisable to get a software individually and put your own taxes? Because I know people do that. Mr. Boatin just said that it's best to get a professional. But I know that people also do it on their own and get their terrible tax and all that, out there. I don't want to mention any, but they are there for people to use. What do you say about that?
My comment on that, and just before that, let me add a little bit more to what we just discussed. When it comes to fraud in not filing taxes, there is no statute of limitation.
Okay.
IRS can come for you at any time and they can go back as far as they can. In terms of filing your own taxes or getting a professional to help you, I think it determines by the complexity of your tax returns. Preparing taxes is very expensive. So if your income is just W-2, you don't have any dependents, you think that you're not going to get you are not entitled to any credit, yes, you can do it on your own. But if your taxes are more comprehensive, I would rather get somebody to help me do it. The person can get you all the credits that you're entitled to, all the deductions that you are entitled to, and all the benefits that you can get from your taxes. It's very, very easy and simple to do your tax returns the right way at the first time than to go back and do an amendment. So yes, if you're a single person, your income is just from one source, a single W-2, you can do it on your own. You have multiple incomes, you have so many exemptions and dependents, and your tax issues are more complicated. I'll get a professional help to help me. Who is a professional person that can help you? A CPA, somebody that is enrolled by the IRS as an enrolled agent, or even a lawyer.
Okay.
I will not pay. And another thing too, some people, when they do their taxes, they don't sign it. Anybody that does your taxes for a fee is required by the IRS to sign it as a preparer. If you come to me and I'll do your taxes, and at the bottom I write self-prepared, it means you prepared the taxes yourself, though you came to me. You cannot help hold
So
the
the accountant doesn't want to take the responsibility.
That's right.
That's why they put self-prepared for you.
For you, it means you did it yourself.
Okay.
The accountant that is licensed, that is doing your taxes for fee, is supposed to sign it. And if the person says, I'm not going to sign it because you're my brother, my friend, my girlfriend's, my ex-girlfriend's brother-in-law, stay away from that.
Okay.
That's my simple advice.
That's a great one. That you go to somebody, they're preparing, they put in self-prepared, be careful.
Be careful.
They don't want to own up to what they put in the taxes. And I also feel that tax information is a bit complicated. So if you're doing it yourself, you must understand all the glitches and the nicks and the things that you put in there. So I feel it's best to see somebody who understands those things to prepare it. And like you said, it depends on the complexity of the tax. Now, Mr. Edu, you mentioned W-2. I would like us to explain W-2, W-4, W-2, 1099, and the information about filing with Social Security versus filing with the EIN number or the
10.
10.
Identification number. Yeah.
Okay, identification number. I want us to clarify those things because it gets very complicated for us.
For most of us, our first entry to the tax corridor is the W-4.
Okay.
W-4 is a form that you fill and give it to your employer, telling the employer how much money the employer is supposed to take from your salary. On that form, it has a line on how many exemptions that you're going to claim, how many dependents and all that. Most of us, we just go out there and put my name and address and social security number, and I'm claiming 4. I put 4 on down there. Now, read in between the two lines. There are so many fine prints in there that talks about if you have a double job, you have 2 jobs. If you come from a family that has a double income from 2 sources. There are so many things on the form that tells you how many exemptions that you can claim. And here again, there are differences between exemptions and dependents.
Okay.
Okay. I think we may come to
Yes,
this
yeah,
a
we'll
little bit.
explain that.
But the W-4 is your first entrance to the tax corridor. You fill it, you give it to your employer. Hey, this is how much money, not how much money. This is how much I want you to take from my income tax. You can fill the W-4 today and change it tomorrow.
Okay.
There's no limit on how many forms, how many times you can change.
Okay.
Just pay attention to what is on the form. If you have 2 jobs, say you alone, you don't have any dependents, you claim 1 on this job, you claim 1 on the other job. It's a no-no. If you do that, you're going to owe. Because this employer does not know how many exemptions that you are claiming with the other employer. So make sure that you maximize all your exemptions on that form. That's the W-4. At the end of the year, December 31st, as Mr. Barton here mentioned, your employer will give you a W-2. W-2 is what we call the wages summary. The employer is telling you, Mr. Doe, this is how much money you earned for the year, this is how much money you took out for income tax, for social security taxes, and for Medicaid, and also for your state taxes. One thing that you can do is you can compare the information that W-2 to your last pay stub that you get at the end of the year. It should contain the same information.
Okay.
And that is the wage summary. That one is given to you by your employer. The W-4 is given to you, is given by you to your employer.
Yes.
1099. 1099 is similar to the W-2, except that the 1099, when you receive it, it means you are an independent contractor.
Okay.
You are not an employee of the company. The company did not take any income tax from your salaries that they pay you. You're going to pay that on your own. To get either a W-2 or a 1099 or even the W-4, you have to get your social security number. You have to give it to the employer. Okay. Self-employed people or people that own their own business, some of them, instead of giving their social security number to the employer, they may have a company. So they give the employer identification number to the company. So Asna, instead of giving me a 1099 in my name, give it to me in the name of my company. The company cannot have a social security number. The EIN is the equivalent of the social security number for the company. So you either need a social security number or a EIN to get a 1099.
What is the full name for the EIN?
It's called Employer Identification Number.
Okay.
And it's given to you, the company or the individual in the company, by the IRS.
Okay.
If you register a company with the state, the number the state is going to give to you is not your year-end number. IRS is the only one that can give you the year-end number.
I see. So, Mr. Watson, you have something to add to that?
Yes. I have more to say. So, as he said, the main difference between W-2 and 1099 is what he alluded to. They will take you taxes from your W-2 after you fill the W-4 forms to your employer. Now, when you have the 1099, nothing is taken off that income. So somebody who makes $30,000 from a W-2 employer, as opposed to somebody who makes $30,000 from a 1099 employer, the difference is that the one with W-2, they've already taken all these taxes: federal, Social Security, Medicaid, Medicare, and then states. So you may see $30,000, but that's not what you took home, because that has been taken from January to December. So that's why when they give you the W-2, then you will see how much you made and then how much you took home based on your paycheck. So Mr. Edu was mentioned the last paycheck. Sometimes, depending on the pay period, sometimes it overlaps. So for instance, somebody will have somebody may have his or her pay for, let's say, December 27th to January 14th or January 10th. So there's a cutoff because of the tax issue at the time. So sometimes that's why we tell people, don't bring your last paycheck for me to file taxes.
I see.
Because it may be wrong, because I don't know the tax period.
Okay.
So the period is not like it ends on 31st December. Sometimes it overlaps, and the company will just truncate that time, so that is where because they are trying to get the exact amount that you work from January to December 31st. So wait till you get your W-2 before you go to your tax professional. Yes, and then one of the things that you have to also know is that the 1099. If your employer, like for instance, any small business who register his or her business with the state, he gets his EIN number, and then somebody works for that employer, right? So at the end of the day, if the service that was provided to you by somebody is less than $600, you are not obligated to give that person 1099. The minimum is $600. Like, so if you have your own business and somebody come to set up this for you, and then he's charging you, let's say, $250 for the whole year, you don't have any obligation to send that person 1099. It's only when it's above $600 for the entire year before you can send that, because it's also you have administrative cost and other things if you try to give the person 1099. So you have to, those who owns businesses have to take note of that. Yes. If it's more than 600, you can give the person 1099. If not, don't. And then one last point, the W-2, people always mistake all the deductions on the W-2. That you see, I'm talking about the deduction of the W-2, yes, the entire year, the summary. We use only the federal for tax purposes, federal and state. Social Security, Medicare, and Medicaid, we don't use it. It doesn't factor into the taxes. So people were saying, oh, they took me $3,000 for Social Security, this thing for $2,000 for Medicare. Why is it I'm getting this refund? No, it is only the federal and the state that affect our taxes. Yes, so please, people should not take note of that also.
I see.
And let me add something more before you go. And this also goes back to the first question that we asked, what Mr. Wharton just said. Income is when you earn it, not necessarily when you receive it.
Yes.
For general accounting purposes. So if I have a business, I work from January to December, and you don't pay me until the 5th of January, for accounting purposes, that money is part of my income as of December 31st. But when it comes to W-2, as you just mentioned, the pay period ended on December 27th. Then you are not paying me until January 5th.
Yes.
This amount here will not be on my W-2.
past December.
December, it will be on my next year's W-2.
I see.
So for tax purposes, individuals, for W-2 tax purposes, the income is when you receive it. For accounting purposes, the income is when you earn it.
Yes.
This